So what I'm about to say often catches real estate investors off guard, and a very spirited debate, sometimes argument follows. So be prepared. And my statement is that cash flow is not everything. Now, let me say again, cash flow is not everything. Now, I'm not saying cash flow is not important. It is. What I'm saying is cash flow is not the only thing to look at, because there are four ways to make money in real estate, and cash flow is just one. And most of the training online and most people default to just looking at cash flow or cash on cash return. And I think that's the wrong way to look at it. Why would you measure an investment with only 1/4 or 25% of the actual picture? So I'm going to jump over to Property Llama, and I have a $100,000 fictitious rental property up on the screen here. And I put $100,000 property on here for just nice, easy round numbers. I just want to go for concept and teaching here, not for actually like real underwriting or real properties. So I acted like I just bought this property yesterday. And what it is I bought a rental property for $100,000, and I put down a $25,000 down payment, or 25% down payment. I'm assuming $5,000 in closing costs and $5,000 in repairs. So altogether, I've outlaid $35,000 to buy this $100,000 rental property. Now, I'm not going to go into like rents and expenses, all that stuff. Just assume they're all kind of just like, normal stuff to make the numbers work out on here for a $100,000 conceptual property. So people get that $100,000 property, $25,000 down payment, and $10,000 in transaction and rent ready cost. And then people say, well, how much money am I making on there? And that's where they default to a cash on cash return or a cash flow. In this case, I'm making 6.77% cash on cash return. So that's right here is what that's showing me. Now, the way that's calculated is that's simply taking the annual cash flow of the property, $2,369, and then we are dividing that by the total cash outlay, $35,000. I'm in the camp of including all costs it takes a property to get rented, not just the down payment. So $2,300 and change divided by $35,000 gets you this 6.77% cash on cash return. So when I got into real estate investing, a lot of people would say, oh, well, you're making 6.7% on your money. Well, am I really? And I've had a lot of clients say, well, if I'm making 6.7% of my money, why am I going to invest in real estate when the stock market over here can make me 8 to 10% historically? Now, of course, disclaimer, I'm not your stock advisor. I'm not giving you financial advice. I'm just trying to give you some apple to apple comparisons on how I've learned to look at real estate investing and also start figuring out the best place to put my capital into. So back to the math here, say, hey, I'm making a 6.77% return on my money, but I'm going to make 10% in the stock market. Well, I should just invest in the stock market. No, you're comparing an apple to an orange, and you're comparing 25% of your return in real estate to a 100% return in the stock market. That's not fair, nor is it accurate, because real estate has four ways, and stocks generally have two ways. That 10% return for like the S&P 500 is a combination of stock price appreciation and dividends. So those are two ways we're getting that 10% return. So if I'm looking at a piece of real estate, why am I just going to say, oh, I'm making a 6.7% return cash flow wise, or in terms of stocks, I'm making a 6.7% dividend, but I'm not going to compare the other three ways. It doesn't make any sense. In my mind, it doesn't. So let me walk you through the four ways, and you can tell me how you like my logic. So I've got cash flow here, which we all know about. I'm going to toggle from dollar amount here in the middle of the circle to a percent return. I'm going to remove the four other ways and just talk about cash flow. So the 6.8% is the same as the 6.77% up here. It's rounded because of one decimal. So I'm making 6.8%. So again, going to stocks, my stocks have dividends and price appreciation. But in real estate, a lot of people say, oh, only the cash flow. Why? You'll accept and you'll forecast stock price appreciation, but you won't accept and forecast real estate appreciation. Now, I can go through a bunch of trends, but majority of times, real estate goes up every single year. A lot less roller coastery than the stock market. So let's put into appreciation on here. Oh, well, that bumped my return to 16.2%. Hey, wait a second. What's happening here? So I'm going to go back to this raw dollar amount, and it's saying I'm making $3,300 in appreciation. What the system is doing here is it's saying, oh, well, whatever assumption you have down here, 3%, and that's usually the system default, but you can come in here and change it, or perhaps your agent help change it for you as well. It's saying, hey, the price is going to appreciate 3% this year, from 100,000 to 110 or 103,000, and let's take and figure out the return on there. So you made that amount of money, and it's saying I made $3,300 divided by my total down payment of $35,000. Again, so now this is more comparable in my mind to comparing real estate and stocks on the way stocks are measured, price appreciation and dividends. And now we're looking at real estate price appreciation and real estate cash flow or dividends on there. So I'm going to put appreciation back into the category or the circle here and go back to percent return. Well, now I'm making 16.2%. The last time I checked, that is higher than the stock market. Now, is this guaranteed? Absolutely not. But again, we're only two of the ways through understanding how we make money in real estate. The third is debt paydown or principal reduction. Because what happens every time you send a check or you send a payment towards your mortgage company? Well, part of that check goes towards interest, and part of that check goes towards principal reduction or paying down the principal. And so who is actually paying that? Well, for most people, it is their tenant or is their Airbnb guest, where part of that rent, once it pays expenses, is going towards the mortgage payment. And usually most of the rent's going towards the mortgage payment. And so it's really your tenant is paying for that principal reduction. So now as we're paying off a little bit of principal every single month, we can calculate, hey, we're gaining that equity, because that's what principal reduction is, equity in your real estate piggy bank. So now, based on how much we should pay down in principal this year, that should be a 3.2% return on the money outlaid. That's my $3,500 or $35,000. So I should make about $1,100 this year in debt pay down. $1,100 divided by that $35,000 down payment is what gives us a 3.2% return. So again, now we're up to 19.4%, and we have one more way to talk about the fourth. Now, this is depreciation with a D, not to be confused with appreciation with an A. Depreciation is the most misunderstood and probably the most complex aspect about real estate investing. I will go into the details in a future video, but I don't want to put everyone to sleep because it's a very nuanced and a very complicated topic. But this is the tax benefits. Now, when you buy a rental property or a piece of real estate to go out there and rent out to someone, it is essentially a business asset, and the IRS gives you incredibly favored tax advantages as a real estate owner. Now, again, won't go into the details on here, but understand this has a return, and it might be small, it might be big, but I should make about $700 in tax benefits, basically $7 so I don't pay in taxes, and I get a return on that of about 1.9%. So got a little funky stuff going on here with the graph over here from switching around, but you add all these up, and I'm now making about a 21.3% return on my money. Now, let's come back and relook at this, because who's right, who's wrong? Am I really making a 6.77% return on my money, or am I making a 21% return on my money? Well, in my views, I look at the 4 ways to make money in real estate, because I'm not going to compare the 2 ways in the stock market and compare it to 1 way when it comes to real estate investing. The other thing too is a lot of times people get so fixated on a certain cash on cash return, like, oh, it's got to be a 10% or higher cash on cash return than the stock market for it to make sense. Why? Again, you're comparing one of the 4 ways on how to make money that you can with when you do in the stock market. So I'm going to kind of start wrapping up the video here, because I want you to start just understanding that there are 4 ways to make money in real estate. And to give you a really good visualization, here is a very simple fraction. Your return on investment, or ROI, is equal to your cash flow, appreciation, debt pay down, and depreciation divided by your total initial investment, your down payment, your loan and closing costs, and your rent, ready, and repair cost. So this is just a visualization for what I was just showing you over here when it came to dividing these numbers. So this 7,456 right here is the four of these things up top of the numerator. And then the total investment of this $35,000 is the denominator. That's all the money I had to outlay in order to buy this rental property. So we take the four ways, divide by the down payment, or my total investment, I should say, and it's about $7,500 in total return, or about a 22% return on my money. All right. So I'm going to wrap up there. What I would recommend, depending on where you are in your investing journey, this may be a brand new concept. You may understand all of it. You may be in between. Spend some time here and either rewatch the video, or what I'd really recommend is two things. Go into your Property Llama account and go just play around with some of these figures. Go click on these different aspects. Read some of these help boxes here and just start kind of getting your head wrapped around it. The second thing is, connect with your real estate coach that invites you along here as well, because he or she can help explain the concepts, help apply to your local market or one of your rental properties as well. So do those two things, but also keep going through the rest of this real estate wealth formula course, and I'll continue to break down this concept and come back to here. But I want to be very, very clear that this is a core concept that we'll keep building upon. So please keep this in the back of your mind, because I planted the seed and now we're going to nurture it, because as we go on to more advanced wealth building techniques, I want you to understand the four ways that you make money in real estate.